Good afternoon, ladies and gentlemen, and welcome to the Wapic Insurance PLC Q3 2018 Investors Analyst Conference Call. My name is Bode Ojeni, Executive Director, Sales and Distribution. I'm being joined today by Mrs. Yinka Adekoya, Managing Director, Wapic Insurance PLC, Mr. Adedayaro Ojolu, Managing Director, Wapic Insurance Ghana Limited, Mr. Olufemi Obaleke, Executive Director, Subsidiaries, Mr. Peter Ehime, the Chief Risk Officer and also Executive Director, Technical Operations, Wapic Insurance PLC, Mr. Adewale Koko, Executive Director, Technical Operations, Wapic Life Assurance Limited, Mr. Olusheyi Taiwo, Chief Finance Officer of the company, Mr. Olushola Jeni, Chief Investment Officer of the company, Ms. Toyin Aziz, the Head of Investor Relations. For your information, the 9 months results being presented at this session was published on Monday in the National Dailies. During this call, we'll discuss our business outlook. I might be making forward-looking statements. These statements and comments are based on our expectation as of today. Actual events and results could differ materially due to a number of risks and uncertainties. Before we jump into the presentation, just a few housekeeping matters. We are streaming live, and as such, the presentation is shared on your desktop and laptop. At this time, we advise participation to be on listen-only mode. I would therefore request that you be kind enough to mute your microphone so I can hear us clearly, and such that background noise does not interfere with the audio. At such a time as the presentation is concluded, we have left ample time in the agenda for questions. Instructions for participation in the Q&A will follow at that time. We'll also take questions that come in. We'll also take questions that come in via the chat feature on Webex. During the Q&A session, please limit yourself to one question and possibly one follow-up question. We will attempt to moderate the questions as seamlessly as possible. As a reminder, this conference is being recorded. Ladies and gentlemen, we'll now go into the presentation proper. On slide 3, we present the outline of the presentation. I will be taking this session through 5 different topics. We'll be presenting to you snapshots of the organization, our operating environment, the regulatory environment, the financial overview, and then I will see the outlook for the last quarter of the year. I will be taking us through the first 3 sessions about operating environment and regulatory environment. Mr. Olusheyi Taiwo, the CFO, will be taking us through the financial overview, and I will return to present the outlook for the last quarter of the year as we see it. Moving on to slide 4, a snapshot of the Wapic Insurance PLC Group. Wapic Insurance PLC operates through 3 entities. Wapic Insurance PLC, which also doubles as the holding company for the group at the moment, Wapic Life Assurance Limited, and Wapic Insurance Ghana Limited, both of which are wholly owned subsidiaries. And we also have one associated company, Coronation Merchant Bank Limited. Total assets under management is about 19 billion, while the total assets of the company is about 35 billion. We have 13.4 billion ordinary shares of 50 kobo each in issue, and a total of about 850,000 shareholders. The company is listed on the Nigerian Stock Exchange, and we have a GDR depository bank with Bank of New York, Mellon. We have 6 regional offices, namely Abuja, Benin, Enugu, Ibadan, Port Harcourt, and Kano. Total market capitalization as of date is about 6 billion naira. We are rated by AM Best, and our current rating is C++ for financial strength and B+ for usual credit rating. Our reinsurance include Munich Re, Africa Re, Waika Re, Continental Re, Nigeria Re, and Ghana Re. Our actuaries are SEY and QED. Our auditors as of date are PwC. Moving on to slide 5, we present the operating environment, and I'll be speaking to these under 4 different subheads: the FX rate, inflation and MPR, crude oil, as well as the GDP. On GDP side, second quarter GDP figures came in at about 1.7% year-on-year, a decline from 0.9% expansion in the prior quarter. This was mainly due to poor performance in the autumn, while other sector conditions continued to rise. The real GDP annual growth rate of 1.5%, though TEPI was better when compared to the same period in Q2 at 0.72%. Naira at the interbank during the quarter depreciated by 60 kobo to the dollar and by 2 naira 60 kobo to the dollar at the parallel market due to pressure from portfolio outflows. We expect that the CBN will continue to intervene in the secondary market to keep the naira assets attractive. On the oil side, Nigeria burning oil price enjoyed an upward trajectory to close at about $84 to the barrel during the third quarter of 2018. The sustained dollar earnings from crude oil minimized the depletion impact of portfolio capital reversals. Available data for Q3 shows that the economy's annual inflation rate averaged around 11.28% as of September 2018, an increase from prior month figure of 11.23%. MPC maintained the same contraction policy stance on the anchor policy rate with no adjustment at its meeting held in September 2018. Moving on to slide 6, we present the regulatory and industry environment developments. NICOM on the 18th of October released a circular to all insurance companies in Nigeria, suspending the implementation of its share-based minimum solvency capital policy until further notice. The Commission in the circular directed insurance companies to continue to operate on subsisting regulatory framework prior to the issuance of the CBMSC circular. Notwithstanding, however, Wapic has successfully recapitalized our life business to enable it to operate in Tier 2 under the CBMSC, while Wapic Insurance PLC will operate in Tier 1. The Nigerian Stock Exchange crossed the major hurdle in its demutualization process and received presidential assent on the bill within the quarter. The bill will transfer the Lagos-based boss from the Mutual Association of Exchange members to a limited liability company which is accountable to shareholders. NICOM in its bid to ensure increased customer access to insurance services and in line with its market development initiative efforts to deepen insurance penetration, announced that it will no longer allow insurance companies to do business in states where they do not have branch offices. And this is expected to commence from January 2019. The CBN has issued codes of corporate governance to 6 other financial institutions in the country. The CBN said the code will take effect from December 1, 2018, but the full implementation will be from April 1st, 2019. The institutions affected are development finance institutions, bureau de change, microfinance banks, finance companies, primary mortgage banks, as well as mortgage refinance companies. I will now hand you over to Mr. Oluseyi Taiwo, the CFO, to take us through the financial review for the Q quarter under review. Thank you very much.
Good afternoon. I'll be taking the outline for the financial review. Under the financial highlights, income statement review, statement of financial position review, and asset under management. Taking us through the group highlights, the total income for Wapic Insurance PLC grew by 25% on a year-on-year basis, closing at 12.8 billion compared to 10.2 billion same period 2017. We had a 29% growth in our gross written premium, closing the Q3 2018 at 10.1 billion compared to 7.8 billion same period 2017. Our total underwriting expense grew by 44%, closing at 5.1 billion compared to 3.5 billion at the end of 2017. We had a 14% decline in our investment and other income, closing at 1.6 billion against 1.9 billion at the end of 2017. We had a slight growth on our expense and provisions of 8%, closing at 3.5 billion at the end of 2018 compared to 3.2 billion at the end of 2017. Our profit before tax declined by 50% at the end of 2018 September, closing at 475 million against 952 million at the end of same period 2017. On the financial position side, our financial assets grew by 16%, closing at 13 billion compared to the full year 2017 position of 11.2 billion. Reinsurance assets grew by 127%, closing at 3.6 billion at the end of September 2018 compared to the full year position of 1.5%. Total assets grew by 22%, while we had a growth of 60% in our total liabilities. Our shareholders' funds remained relatively flat for the period. Our income statement review. The company attained a double-digit billion mark in gross written premium with a 27% year-on-year growth to close at 10.1 billion. This performance more than doubled the industry current average growth of 8%. The company's gross claims paid during the period showed a 21% year-on-year growth, which further impacted the net claims position of 3.1 billion. We had major claims reported on our fire, general accident, oil and gas businesses during the period. Reinsurance expense increased in line with the growth in GWP for the period. The 9% change was largely driven by the increases in our facultative reinsurance output, particularly in our engineering and oil and energy portfolio. Year-on-year increase in operating expense was curtailed significantly, closing at an 8% growth compared to same period last year. The 35% growth in underwriting expense and the 49% growth in our net claims largely impacted the company's underwriting profit position, which closed at 1.3 billion at the end of Q3 2018. This was a slight increase of 7% from the same period 2017. The 50% drop in our profit before tax, closing at 475, was largely impacted by the decrease in investment income and the increase in our net claims expense for the period. The next slide looks at our product performance. Oil and energy, motor and engineering portfolios contributed the highest gross written premium share for the period at 22% and 20% respectively. Following a remarkable premium performance, oil and energy also made the top list of the group's most profitable products with a 76% contribution to the total underwriting profit generated for the period. Fire, aviation, engineering, and life business made underwriting losses following the increased claim experience on these product classes for the period. General accident had the highest underwriting profit margin at 52%. Our group expenses. Net claims expense increased based on the payout experience for the period, largely impacted by the growth in our net claims expense, which grew to 3.1 billion from the 2.1 billion experienced 2017. The 24% growth in our net premium income helps to cushion the net claims ratio, which moved slightly to 57% from the 48% recorded in the corresponding period. Underwriting expenses. The net premium income position positively impacted the underwriting expense ratio, which retracted slightly to 17% from 22% position recorded in the preceding year. The company continues to optimize efficiency and flexibility in its underwriting operations through automation of its business processes across all service levels. Nominal year-on-year growth was recorded across components of operating expenses at 7% on staff cost and 8% for other operating expenses to close at 3.5 billion for the period. This is well below the country's inflation rates for the period. Operating expense margin ratio waned at 35% as the growth in gross written premium cushioned the overall effect of the increase in the operating expense. The company's retention ratio moved up 3 notches to 63% following the growth in net premium income, which closed at 8.62 billion as at the end of September 2018, compared to 7.28 as at the end of same period 2017. We are confident that the reinsurance optimization focus will continue to yield positive underwriting results. Our revenue. The company maintained its double-digit growth in total income for the period at a commendable 25% year-on-year improvement to close at 12.8 billion. The group's growth trajectory recorded a 15% 4-year cumulative annual growth rate as at the end of the reporting period, September 2018. At a share of 64%, a large corporate work group led the business group individual contributors to the total gross written premium. Our subsidiary Wapic Ghana has continued to grow with a 14% contribution to the group's total gross written premium for the period. We would continue to further reposition our retail strategy and implementation. The group's profit position. Underwriting profit recorded a 7% growth from September 2017 position to close at 1.38 billion as at the end of September 2018. Underwriting profit margin, however, dropped slightly by 300 basis points to 14% for the period following an increased GWP position compared to 2017. There was a 50% reduction in profit before tax for the period. This is due to the drop in our net investment income and also increase in the net claims expense for the period. We closed the period with positive return on equity and return on assets at 2% and 1% respectively, albeit a slight decline from prior year's position. We're taking a look at the statement of financial position. Portfolio rebalancing for the strategic growth was the key driver of the 175% increase in cash and cash equivalents from the 2017 full year position to close at 4.8 billion. The financial asset mix component of the portfolio declined by 13% as at the end of September 2018 due to the impact of net payout outflows from this portfolio. The share of profit from associates during the period contributed to the 11% growth in our total assets, closing at 9.2 billion as against 8.2 as at the end of full year 2017. Increase in our insurance recoverable across key product classes largely impacted the growth in our insurance assets for the period. Year-to-date change in insurance and investment contract liabilities for the period was by 50% and 14% respectively. This was driven largely by the growth in the company's pure risk and investment-linked operations for the period. Total shareholders' funds for the period closed at 18 billion. Highlights of our financial position. The ratio of earning assets to total assets for the period reduced slightly by 7% from the full year 2017 position to close at 68% as at the end of September 2018. Total assets for the group grew by 22% to 34.98 billion from 28.6 billion recorded as at the end of full year 2017. Our earning assets also maintained a positive growth of 14% for the period. Total liabilities grew by 60% from the full year position to close at 16.9 billion as at the end of September 2017. This was impacted mainly by the growth in the company's insurance contract liability and increased reinsurance obligations during the year. Our shareholders' fund remained relatively flat as at the end of the period. Assets under management. Moving on to slide 20. Investment property declined as a result of disposals within the portfolio. The company's strategy to fully exit the underperforming legacy properties with the focus of ensuring that funds are invested in securities with higher yields. Bonds had a 29% portfolio share at the end of the period under review to close at 5.4 billion from 4.4 billion recorded as at full year 2017. The growth in the value of investment in associates reflects the group's share of profits in the associate company, CMB. The 388% growth in our unquoted equity investments was necessary to position the portfolio for long-term growth. Quoted investment decreased by 22% as a result of the impact of the general bearish trend in the stock market during the period. Total assets under management decreased as a result of the company's capital injection in the life business subsidiary to fully strengthen its position for improved market opportunities. I will now hand you over back to Bode Ojeni to take the concluding part of the presentation. Thank you.
Thank you, Sheyi. Ladies and gentlemen, we'll move on to slide 21, where we present the outlook for the last quarter of the year. And I'll be presenting these under 4 headers: financial, operational, sales, and people. On financials, we will continue to drive for a solid solvency margin across our business segments. All group companies are sufficiently positioned for the commencement of the new tier-based minimum solvency capital regime as may be announced or commenced by Nikon. We expect to continue to outpace the industry average GWP growth rate in line with our strategic growth expectations. We will continue to maintain our focus on cost optimization and efficiency initiatives throughout the business. We would consistently ensure underwriting discipline, proper risk-based pricing, and portfolio management across all our business operations. In our operations, our digital division will continue to drive the implementation of the group's digital strategy, including digital marketing, channels management, and data analytics and intelligence. We have further streamlined underwriting transactions to enhance our service levels by enabling straight-through processing. We will continue to improve on our risk assessment through advanced information analysis and reporting tools. We are continuing to service omnichannel platform for customers to conveniently connect with us. This will increase our customer satisfaction index as well as improve service delivery and internal efficiencies. On sales, we are expanding our agency sales structure countrywide and solidifying our direct sales business strategy for top-line growth. We have initiated the full implementation of our bank assurance model in all major state capitals across the country, in line with growth opportunities that have been identified. We have restructured our corporate sales business group with a strong push to further deepen our market share. On our people, we are committed to becoming a great place to work, building future champions, and transforming economies and investing in our communities. Our Wapic Academy recently graduated its 5th set of trainees. These are a new set of top-notch executive trainees who have been developed and deployed to core areas across our business functions, both in Nigeria and in Ghana. We will continue to incorporate the behaviors, culture, and innovations associated with leading customer experience providers. This brings us to the end of the presentation. We'd like to thank everyone for listening in. The floor is now open for questions and answers. Should you wish to ask a question, please unmute your phone or computer at this time and speak. We would like to ask that you indicate your name and your company as you ask questions. Thank you very much.
Good afternoon. Good afternoon.
Good afternoon.
My name is Wale Olusi. I'm calling in from United Capital PLC in Lagos. Okay, so basically my question is around the PBT, the 50% decline. I understand that a lower yield environment might have been responsible for the decline in the investment income. But for claims, I'm wondering if management can shed a bit more light on, the close to 50% jump in claims. That's the first one. The second one is the reclassification of some of your businesses following Nikon. I think they call that off now, but you mentioned that some of the businesses have been reclassified accordingly. I also noticed that there's no sharp increase in shareholders' funds. Is there any capital injection during the period? Thank you.
Hello.
Yes, I'm done with the question. I don't know if I was clear.
Could you please go over the questions again?
Okay, so the first question I asked was around the decline in PBT. I mentioned that I understand that investment income is lower, probably due to the yield environment. But for claims, the close to 50% increase in claims, I'm wondering if a little bit more light can be shed into what is driving. That's one. The second question I asked is around the reclassification of some of the business. I'm wondering if there's any capital injection during the period. Thank you.
Thank you very much. I would just request the CFO to respond to this.
Thank you, Mr. Walusi. For the decline in the PBT, what had occurred, just as you said earlier, low yields in the environment, and also for the claims experience, what you would expect is that from the portfolio of assets under management, we've had to pay out claims from that portfolio, which had an impact on the volume. So the impact of the reduction on the volume and also the lower yields is impacted the PBT. So, hello? Hello? Okay, for the second question that relates to capital injection, there was only a need for the parent company, Wapic Insurance, to inject capital to the Wapic Life business, so the Wapic Life business could operate in a tier 2 business, in a tier 2 environment based on the TBMSC released by NICOM. I hope the answers were clear.
Yes, the answers were clear.
Thank you very much.
Hello?
Ladies and gentlemen, I would like to take more questions if there are still any. Thank you.
Yeah, hello, good afternoon.
Good afternoon.
My name is Mustafa Kilani. I'm from EY.
Thank you.
So my question is just to ask if you are comfortable at the tier 2 for your life business, or you have any plan to move to tier 1.
Thank you very much. Now, the major business requirement for tier 1 is the annuity business, which we don't currently write. And at such a time when the organization decides to go into the annuity business, we would sufficiently capitalize our life business to take on that business. So presently, we are comfortable with our tier 2 play level. Thank you.
Yeah, thank you very much. Yeah, I'm okay.
Ladies and gentlemen, the floor is still open for questions. Any. In the absence of any further question, we'd like to thank you all for your participation at this session today. We look forward to having you around again when we present performance for the full year 2018.
Hello, I have a question.
Thank you. Please go ahead.
My name is Mayawa, and I'm a researcher. And my question is, how many states in Nigeria does Wapic currently have visible branches in? And are there plans to expand operations into other states? And then the second question is, what would you consider as your next big strategy to win competition in 2019, especially in the retail sector?
Thank you very much, Mayawa. With respect to your first question, on our bank assurance partnership with Access Bank, we are present operating through the Access Bank branches in every state of the Federation where Access Bank operates. However, we have 6 regional offices presently, which is based in Abuja, Benin, Enugu, Ibadan, Port Harcourt, and Kano. Then to your second question with respect to our next big plan. Over the last 2 years, we've been putting together a retail strategy, which implementation commenced towards the last quarter of 2017. And this is where we intend to play going into the future. We are repositioning our retail rollout, and we expect to see this play out in the coming months. Again, we are also looking at playing heavily within the digital space. In the last 2 quarters, when we had the conference calls, we did mention the fact that we had created a separate division for our digital play. And a number of things are being rolled out now under the strategy and implementation plan for the digital division. And we expect also to see us playing heavily in terms of competition in this space. Thank you.
Okay, thank you.
Good afternoon again.
Good
My
afternoon.
name is Wale.
Please go
from
ahead.
United Capital.
Please
Sorry,
go ahead.
just an addition to what Mayawa asked.
Yes, please.
The new regulation from NICOM, my best of my understanding, they don't want insurers to play in states where they don't have direct branches, and you're not, considering any extra expansion. I'm wondering if there's going to be friction with, the relationship with Access Bank and what you currently have, given this new regulation.
Our understanding, and thank you for the question. Our understanding of the bank assurance strategy is that we operate through the bank branches. And to the extent that we have that partnership and we have our staff physically present in those Access Bank branches, we are present in that state and we can play within the limits of what NICOM accepts. I don't know if that answers the question.
Yeah, I think I have a fair idea of what that means.
Thank you. We would like to take more questions if there are still any. Thank you.
I'm wondering if we can short on where this NICOM reclassification that was recently overrun by the courts is going to land? I mean, just about the financials now, something on the regulatory environment. Are we likely to see that close out very soon, given the back and forth with insurers and ICOM?
Thank you very much. At this time, it will be difficult for us as Wapic to give an opinion on where this would end or how long this will play out, especially considering the fact that court cases don't have a specific timeline. But we expect a positive outcome at the end of the day. Either way, Wapic is well positioned to commence full implementation of TBMSC at whatever time NICOM decides to, or NICOM gets a judgment plus. Thank you.
Okay, thank you very much, sir.
Thank you.
Yeah. I'm going to try this again because
if there are no further questions, we'd like to thank you all for your participation at today's session. We look forward to having you again on board when we present Q4, our full year 2018 financial results on this same platform. Thank you for your support for Wapic. I wish you all the best for the rest of the day today. Thank you and God bless.
yeah, thank you. Have a nice day.
Thank you.